Hi fellow traders, I'm making this video to share my trading plan of GBP USD with you. Just like Euro USD, we got a false breakout on GBP USD as well. So if you look at the candle of August 19, it actually almost engulfed its previous candle. So despite previous candle had made a nice bullish breakout above this previous resistance, today's reversal to the downside almost below the opening price of previous candle proved that this was a false bullish breakout, or you can say fake out. So now our butterfly, which was initially till here, will be drawn till this point, and it will still be effective and bearish context, and we will have bearish context here. Now is the time to discuss how are we going to trade this butterfly, and where will be our entry price, where will be our SL, and where will be our TP. Before I go to other time frame to discuss about all these entry level and exit levels, I'll let you know that I have deleted previously mentioned harmonic pattern because that was not mathematically harmonic and that was a 3 drive. So now we just have this butterfly. This overbought area is what I had already discussed about. So I'm again on this RSI. You can see that the RSI 22 is being used, just like I used RSI 22 instead of default RSI 14 in Euro USD. So if you want to understand why I'm using RSI 22 instead of default RSI 14, you can go to my video of Euro USD of today, and you can watch Euro USD video to understand. So anyway, if we look at the RSI 22, it was overbought, as I had discussed in previous video of GBP USD, and with this development it had become again overbought as the 70 level was touched. But this new high of RSI was slightly lower than the previous high. So basically RSI made a lower high, whereas price had made a slightly higher high here. So it is a bearish divergence when price makes a higher high, whereas any kind of oscillator makes a lower high. So we have bearish divergence, we have fake out, we have butterfly, and also we have bearish divergence on 4-hour time frame. Remember, it is clearer than the divergence of daily time frame. So here if you look at the price development, price made higher high, whereas MACD, which also is an oscillator, made a lower high. So this is a clear bearish divergence. So these are all the technical factors which are clearly giving us a bearish context, and now is the time to go to the 30-minute time frame and to figure out the entry price for the sell trade. So I'm considering at least 30% retracement on this 30-minute time frame against this recent fast fall, and this is where I'm going to place my sell limit, 31.43.3. From this point my stop loss will be 123.7 pips, because I'm going to place my stop loss right above this recent top. So it will be 123.7 plus 1 pip plus a spread, so something around 125 pips is what my SL is gonna be. So this is about the SL. Now again I'm going back to daily time frame to talk about the butterfly, because I'm gonna decide my TP as per the butterfly. If a reversal pattern doesn't work for full reversal, it can at least cause 30% retracement against its entire movement. So here entire movement is from A to point D, and 30% from A to D will be the minimum target of this butterfly. So here I'm placing 30% level, and I've used this 30% level against butterfly and harmonic patterns in many other analysis too. So this is a well used formula, and this has been successful many times. So 30% of butterfly. I'm gonna make this visible at all the time frame. Alright, so our target will be this 30% of butterfly. Again we'll go back to half an hour time frame and we'll compare our SL and TP. Alright, just a moment. Okay, so if our sell limit will be triggered, I mean to say that if price will go up and if our sell limit will be executed, then 125, roughly 125 pips will be our SL, and 180 pips will be our TP. So our TP is quite bigger than the SL. We have a very good risk to reward ratio, so this is a very good trade. So let's see what happens. And if you have had buy position after that false breakout, the false bullish breakout, then you can close your buy position at this level, this 30% level, instead of closing right now. But if you already closed, then okay, no problem. That's why I always suggest I always suggest to use closing of for our daily candle. Not always place the SL, because sometimes price moves back and retraces back, and it gives you a slightly better exit point to mitigate your loss. So that's a different thing. It is not the part of our sell trade. So basically this video was not about discussing say a buy trade associated with the false breakout 2 days ago. This video is about the sell trade, and you have this 125 to 180 pips risk to reward ratio and all other technical factors in bearish context. So let's see what happens with this trade. Thank you for watching.